Before I begin to this video, let me give a quick disclaimer. I am not a financial advisor. The content of my videos represents my personal opinions and is provided for informational and entertainment purposes only. My information is not intended to be legal, financial, or an investment advice. Always conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Please make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts.
Hey investors and traders, welcome back to Talk Stocks with me, your weekly market compass. Let's begin this week's video with a summary of the key economic and market highlights for the past week. First, the Federal Reserve holds interest rates steady. On May 7, the Fed maintained its benchmark interest rate, citing risk of both inflation and unemployment. This decision reflects the cautious approach by the Fed amid heightened economic uncertainty, particularly due to recent tariff policies. Second, US-UK trade agreement announced. A preliminary trade deal between the US and UK was announced on May 8, easing some of the tariff on items such as cars, steel, and aluminium. This agreement provided a boost to investor sentiment, with the Dow Jones Industrial Average rising over 250 points following the news. Third, US-China trade talks continue amid high tariffs. Negotiations between the US and China resumed in Switzerland, aiming to ease a high-stakes trade war. Despite President Trump's optimistic remarks about the progress, no concrete agreements were reached, leaving the markets cautious. And finally, bond markets react to trade policy uncertainty. The bond market experienced volatility, with long-term treasury yields rising due to declining bond prices. This reflects investor concerns about inflation and economic growth amid unpredictable trade policies. So what does this all mean to your portfolio? Stick around as we get into it in this video. Welcome to this week's technical analysis segment titled Big Money Leaves Footprints. In this segment, we are zeroing in on abnormal buying and selling activity, those sudden spikes in volume and sharp price moves that often hint at institutional interest or panic-driven exits. These unusual footprints can reveal where the real action is happening before the headlights catch up. In this segment, I hope to explain the definition of abnormal buying activities as well as abnormal selling activities, how I detect them, and lastly, why they matter for my strategy. Abnormal buying activity happens when a stock's price and trading volume rises much more than what is statistically normal for that stock. In other words, price moves up sharply, volume spikes significantly, and the movement is so strong that it is statistically significant, meaning it falls outside usual random noise we expect for that given financial instrument. To be specific, we define this movement has been outside the 95 to 99% confidence interval. This tells me that serious buyers are stepping in, possibly large institutions, funds, or major investors. Abnormal selling activity is the mirror opposite of abnormal buying activities. This happens when a stock's price decreases, accompanied with significant trading volume. That means price moves down sharply, volume spikes significantly, and the movement is so strong that it's statistically significant. This, on the other hand, tells me that there is a negative news or potential any misses or large investors exiting their positions. You might wonder, why did I dedicate a topic today for abnormal selling activities? Well, they help me to identify hidden strengths or weakness early. They help me to enter trades area, especially during strong accumulation. They also help me to exit positions faster if heavy selling starts. Also, I'm able to understand when a stock is in play, I might have big moves incoming. Remember, when this abnormal activities is combined with technical analysis like support and resistance levels, abnormal activity signals become more powerful tools for traders and investors. Now let's go through some real world examples of where spotting these activities have helped me to make good money in the market, looking at financial instruments across the Nigerian stock market and the US stock market. Let's flip to TradingView next. Now let's bring the theory to life with real world example. Here on TradingView, I have the asset Owando displayed on the chart with my custom algorithm that also exhibits the abnormal buying and selling activity. For this video, I want you to focus on the green arrows and the red arrows. Let's forget about the signals that are being generated on the chart, the buy and exit buy signals, and just focus on the theme of today's message, abnormal buying and selling activities. Now, what I've done is green arrows indicated above the candlestick are triggered whenever abnormal buying activity occurred, as well as the red arrows whenever abnormal selling activity has occurred. I want you to notice that when green arrows appeared, price often moved higher in the following weeks. When red arrows appeared, price usually declined or entered correction zones. This simple but powerful method helps you visualize when big buyers or sellers are active and prepare for possible trends or reversals. Now, let's also look at another asset, Presco, in the Nigerian stock market. Once again, you can see where sellers are in charge and where buyers are in charge. Clearly, you want to take your position in favor of the camp that is leading the price action. Let's also look at a more recent trade that I also initiated in the Nigerian stock market, which is in Nigerian berries. And you can clearly see again here where sellers were predominantly in charge of the market and where there was a flip into institutional buying. You can see, and this is where a buy signal was generated. This is in October or September, and you see recently this big trend led to a 70% gain within the following weeks. The next let's move to the US market to show that this attribute or this theory is not only applicable in the Nigerian market but also in the US stock market. Let's use Nvidia as our case example, which was once the darling, or maybe you see still is the darling of the US market. But now, clearly, let's look at what is happening again. You can see traces of abnormal buying activities where buyers are in charge of the price action. As a trader, you want to align with this trend. Here, a sell signal was generated some weeks after when there were traces of abnormal selling activity in the market. And you can see the following weeks, as a trader, you are out of the market. Please, I need to point it out here. All this theory, all this strategy is for trading. It's for my trader heart. As a long-term investor, whatever you are doing, continue to dollar cost averaging. This theory, this approach only aligns with how I trade. Now you can see that sellers were predominantly in charge of the price action, and here buying activity is getting recorded into the market. You see, I'm already seeing that is happening. You can see how I'm able to use my code to see how market sentiment is changing. However, even though there was significant rally, my own algorithm didn't trigger a buy activity not until some many more weeks ahead, and you can still see how abnormal buying activity was spotted. And basically, you can see these buys are typically spotted on a break of pullback. You can see, and this is where abnormal selling started coming into the market, and here the signal generated an exit. So this gain, if one had traded this, would have been 133%. And you can see since this exit, I've not been able to spot any abnormal buying activity. It is still retail traders who are still holding on to the story, who are still in love with the stock, that are still pushing this price up. But I can't see institutional buying. I can only see institutions selling. So you can still see retail traders again still holding on to the belief or the hype around the stock. This is the trend line where the stock is currently facing. Now let's also look at Palantir, which is one of the darling of the US stock market, just to see what is happening. Now, clearly, what can you see on this chart? Abnormal buying activities. This is why you want to sit in this type of stock, because see, it's all abnormal buying activity. Yeah, there's one abnormal selling, but predominantly it's still been abnormal buying. All the selling, yes, they are price decline, but they are not abnormal. They are not statistically significant. This is how you are able to play the market. Lastly, let's look at GBTC, which is an ETF for Bitcoin. I know Bitcoin has been bullish recently in the past few weeks, and let's see what is happening. Clearly, again, you are able to see selling when sellers are in charge of the price action. When it flips to buying, please stay away from my buy signals. I know they are attractive or they get your attention, but the story is you want to see when institutions are loading or unloading. You can see institutions loading here. There was some little unloading here. This came back into the market here. They pushed it here. There was some selling here, and now the more recent price action, I can't see traces of institution. It is retail traders, or even if we call it institutions, they are nimbling into positions. They are not going in heavy the way they were going in heavy here. Now, I'll also like to end this session with SPY, because I know the US stock market has been in some of correction, especially since the tariff came into play and we saw a very huge correction. But now I know the market has bounced back since then. But let's see, are these institutions that are stepping in, or is it retail trader, or is it even nimbling into positions? So this can help you know what is happening. So let's put the SPY on the chart to, let's put it on the spotlight to see what is happening. This is a spy on chart here. This is the parallel line I drew where that the chart has been shown. But what I want you to see is abnormal buying activities, and abnormal selling activities. And you can clearly see for this algorithm, one will be out here on 3rd of March. Save yourself from all this decline. But the interesting thing is that even though the price has kind of reversed, I still don't see any footprint of institutions loading. They are, even if institutions are buying positions, they are nimbling into position. But I would predominantly say this is the activity of retail traders. And you can see the 50% line here where the SPY is already testing, and you can see that there has been some selling action. So what are my final thoughts? Abnormal price and volume activity is one of the strongest early warning systems you can use. It filters out noise and focuses you on stocks that matter when they matter most. Whether you are trading the Nigerian market or global market, understanding these signals can level up your decision making and timing. Let's commence our weekly commentary of the markets and outlook based solely on the established reference technical markers or indicators. This week, the US large cap stocks tracked by the VTWO delivered a performance of positive 0.30%. Year to date, VTWO has delivered a performance of minus 3.74%. The short-term trend on the daily time frame is neutral, while the mid-term trend established from the weekly chart is neutral. Moving on to the Nasdaq, represented by the ETF QQQ. This week posted a change of 0.70%, bringing its year-to-date performance at minus 4.55%. The short-term trend established from the daily time frame is neutral, and the mid-term trend inferred from the weekly chart is neutral. US small cap stocks tracked by the performance of VTWO this week posted a move of 1.12%. Year to date, VTWO has delivered a return of negative 9.15%. The short-term trend observed from the daily time frame is neutral, and the mid-term trend from the weekly chart is bearish. Canadian equities tracked by the ETF VCN printed a weekly change of 1.31%. Year to date, VCN has delivered a return of positive 2.95%. The short-term trend on the daily time frame is neutral, while the mid-term trend established from the weekly chart is also neutral. Switching to the Nigerian market tracked by the ASI, this week saw a gain of 0.67%. Year to date, the ASI has delivered a return of 5.64%. The short-term trend on the daily chart is neutral but slightly bullish, and the mid-term trend on the weekly chart is bullish. Furthermore, oil commodity tracked by the ETF USO recorded a performance of positive 5.98% this week. Year to date, oil prices have delivered a return of negative 11.83%. The short-term trend on the daily chart is neutral, while the mid-term trend on the weekly chart is also neutral. Finally, Bitcoin, tracked by GBTC, posted a change of 9.56% this week. Year to date, Bitcoin prices have delivered an overall of 10%. The short-term trend on the daily time frame is slightly bullish, and the mid-term trend on the weekly chart is also slightly bullish. As we wrap up this week and go into a new week, markets across the board are trading cautiously. The US and Canadian indices are stuck in neutral, reflecting investor indecision amid macro uncertainty, while small caps are showing signs of weakness. On the flip side, emerging markets like Nigeria and assets like oil and Bitcoin are flashing some optimism, hinting at selective strength. It's a reminder that even in choppy waters, there are pockets of opportunities. Stay focused, stay diversified, and let the trends guide your conviction. See you next week right here on Talk Stocks with me. And please don't forget to like, hit that subscription button to stay informed and get notifications of my teachings and videos in the future. Until then, stay blessed. Bye-bye.